to be talking about this afternoon. So let's start strong. You both mentioned to me during lunch that we're in the post-FTX era. Yes. What is that, and why do you believe that there's a new era beginning after the FTX collapse?
So first of all, we cannot underestimate the consequences of FTX crash because it was one of the biggest exchanges and has a lot of influence at the whole market. And it's very important to mention that FTX is not only an exchange, but they also have the Alameda Research, which is a trading firm, and they invested in a lot of companies, like more than hundreds of companies are invested by FTX Ventures or Alameda or someone from their team personally. And of course, there is a new understanding of the market from the people outside of crypto because they're scared. Like, hey, we invested and then money just disappeared. And that's why we call it like post-FTX, because there should be some changes. There was one sign at the market in May when Luna crashed, and at that time it was not considered properly. And let's say Doc One is still free, as I know he hides somewhere in Serbia. Yeah, but with Sam, it will be much more strict. Like today, there was a news that he could get like 115 years of prison, which is probably more than he can survive. And yeah, so for us, for the people in the crypto world, of course, it's one more sign that we should come to a more transparent world, and we cannot bring time back. Right. It's not back to the future. But we can make something not to allow this kind of things happen in the future.
I made a small mistake because I didn't ask you to introduce yourself before we begin. So before you start, tell us exactly who you are, what you're doing. Then we go back to you, Eugene, and then Stephen, your answer on the FTX thing.
My pleasure. Stephen Picciano. I am a new partner at Helion Ventures, here based in Dubai. My background in brief is started out as a Wall Street kind of garden variety broker, became a trader, portfolio manager, was poached to work for a prominent Saudi family, which brought me to Dubai way back in 2004. And I've been growing my relationships and sphere of influence ever since, and I am delighted to be here.
Thanks. Eugene, a bit of your introduction, and then we can move back to Stephen about the FTX thing.
Thank you, Leandro. So my name is Eugene, and I'm also the partner at Helion Ventures. As Stephen said, we are the investment firm and the Dubai venture builder, focused to help companies to grow here in the MENA region and also in Africa and India. I have more than 5 years of experience in the crypto world. Originally, I came from the stock market, started to invest and organized a couple of conferences, did educational course in the economic university. Then I had my fundraising agency for the startups, then the investment pool where we invested together through the launchpads and private sales. And I joined Oliver and Boyan in the Helion Ventures so that now we grow this ecosystem together.
Perfect. Now on to you. Yes, properly.
Back to FTX.
Yes.
One is reminded of the meltdown in Mt. Gox some years ago, which many of you may be familiar with, which also resulted in real reputational harm to the industry writ large. In the post-FTX world, it is hoped that there will be a greater transparency, certainly greater oversight, but our ongoing concern is that there might be excessive regulation. And if that, in fact, is the case, that could undermine the fundamental mission of blockchain and cryptocurrency. So I think what's called for is not such a heavy hand, a good measure of self-regulation with regard to exchanges. We're seeing these massive withdrawals in Binance, for example. We're of the belief that it may be a bit of an overreaction, but it's understandable. But in order to win back the public trust and a greater degree of adoption for our industry, again, in a broad sense, I think we need some referees on the field, but not too many referees.
It's a beautiful point, and we just said two things: regulation and self-regulation. Exchanges after the FTX self-regulated and very, very quickly went on to provide proof of reserves, which I think it's something that has never been seen, at least in my opinion, as far as I know. It hasn't been seen in the financial world. So that's an incredibly positive outtake from the FTX fiasco. So if that can happen, and if we see that the community, the whole crypto community, is self-regulating itself to prevent this kind of things from ever happening again and from destroying itself, why should we need government to regulate? I mean, isn't self-regulation doing a good job?
Well, I think unfortunately we've seen a bad example of how things can go seriously wrong. When you have the likes of the Sequoia Capital and other leading lights of Silicon Valley parting with great sums of money, and then with very little in the way of oversight or management of these very young, very naive, but I'm sure very impressive. I'm sure in the room, in the office, when the decisions were made, there was the seduction at work, and these senior bankers were very taken by SBF. But
he must have been charming.
It must have been incredibly charming, but they gave him maybe too much autonomy, I would argue, and I think those days are over. My concern is that the pendulum may swing the opposite way and result in a very constrictive environment, which I think would be self-defeating across the board.
Eugene?
So first of all, I think we should understand that the regulation itself does not solve all the problems. Like we've seen the financial crisis of 2008, and the banks were regulated.
Correct.
But at the same time, they could spend a lot of money which they did not have, and all this, like the bonds and so on. And
but let me stop you there. Was that a problem of regulation or of enforcing that regulation?
I mean, it was the problem that a regulation can't make them follow all the rules and do it properly. So it was not the problem of regulation itself, but it's the problem of all centralized institutions. For example, as I know, any bank in the world does not have reserves to cover all the withdrawals of its clients. So if you,
it's a fractional reserve
Steven,
system.
me, and everyone would like to withdraw at the same time, no bank can cover it. And so it means that there should be some processes which show how much you can withdraw, how much you cannot. And what was the problem with FTX? It's just, as I understand, at some point, Sam started to think that he's a financial genius, and they made some good investments. They did good investments before in the startups and maybe in trading too. And they say, okay, if we earn so much money, why don't we just leverage our earnings by taking the client's money if we give them back anyway?
The chances of failure are assumed to be zero, so there's no need in taking any loans, just use people's money without asking for permission.
It was almost like he had a God complex at some point. He could do no wrong in his mind.
Like he did.
He did.
Now, SBF, Bernie Madoff, did they run a similar scheme, or were those different?
There are definitely some parallels. Bernie Madoff was a very well-respected senior Wall Street guy. I believe he was a member of the New York Stock Exchange. He was the person who would speak at very high prestige functions and speaking engagements around the world, and in New York especially. He just, again, tasted easy money, couldn't look back. He had his sons working for him. They were unaware that he was commingling funds and extracting client funds. And when things turned south in the market and people wanted redemptions, that's when the facade came crumbling down, and it was very hard to stop. But to his credit, and I say this reluctantly to give Bernie Madoff any credit, he was a senior, well-established and well-respected investment banker who really went bad. right before everyone's eyes, and to the shock of a lot of his colleagues and friends. In the case of SBF, he was, woefully underprepared for the kinds of money, and I think success came to him too easily. And by the time anyone figured out what he was doing, what he was actually doing, the monster had grown to unbelievable proportions, and it was not unlike the Barings Bank situation.
And in this post-FTX world, do you think centralized exchange will suffer so much that they will eventually go bankrupt? Like, can Binance go bankrupt? And is the future of finance in decentralized exchange like Uniswap or such? Because as far as I'm concerned, most of the trading is still being done through centralized exchanges.
Yeah.
So, first of all, is it possible that Binance goes bankrupt? Yes, it is. I mean, we cannot be 100% sure that they're secure. In terms of what I know, they're the most secure exchange at the whole market right now. And the strategy they're implementing...
But wait, how do you define secure? What is secure for an exchange?
They provided the proof of reserves, that they have quite a lot of money
101%, something like that, right?
No, it's not 1%. It's much more.
Much more
it's
than
much
100.
more. They have a lot of BUSD. Then they have BTC and BNB. So what is the risk? That they have BNB as part of the reserve, and let's say if the BNB price slightly go down, then they will have much less reserve.
Mm-hmm.
But Binance is not only exchange now, it's the whole ecosystem of the venture fund, of the accelerator, and they have a lot of power at the market. And what CZ is currently making, he's not into operational management, he's more flying back and forth from one government to another, establishing their presence in different places. And so I think that they will try to do the best possible efforts not to collapse. But in case if Binance collapses, it will be a terrible disaster for the whole market. I think much harder than the FTX, probably as like MTGOX or even stronger, because it's the key player. It's the key player at the market, and it has a huge amount of money. It earns huge amount of money, and so this is a danger. And that's why there is a popular saying in the crypto world: "Not your keys, not your money." Like if you don't own keys from your wallet, it means that someone else has your money, and you have a risk of losing it, not because you make the wrong investment decisions, but because something is wrong with the third party. And so that's one of the reasons why decentralized services will develop. For example, after FTX crash, there was a huge growth of Trust Wallet, which I personally earned a bit on it. This is the decentralized wallet where Binance is one of the main stakeholders, and the CZ started to shield Trust Wallet. Hey, don't store your money in the centralized exchanges, put it into the wallet. But you mentioned that a lot of people still trade on centralized exchanges, and it's easily explained. Because in terms of user interface, they're much more convenient. If you swap coins at Uniswap, okay, it's fine. But if you try to trade on Uniswap or 1inch, it's almost impossible. It's very complicated. And of course, there are some projects like DYDX, which can provide you decentralized derivatives, but it's still far beyond the convenience of centralized exchanges. And so for professional traders, it's just impossible to use decentralized exchanges for trading. And that's why we still need time for decentralized services to develop. But for regular people, like for us, if we don't want to trade, we don't need a super fast connection, and we just want to make a portfolio of, I don't know, 10, 20, 30 or whatever coins, we definitely can buy them at decentralized exchanges, then put in the wallet and like wait until the next bull run, get our money, and that's it.
And to educate our audience a bit, let's say you have a wallet in Binance, whatever, a centralized exchange. What can they do with it? What can the centralized exchange do with my coins? Are there any restrictions to what they can do with those?
Well, I'll tell you what they cannot do. They cannot, and SBF has really shone a light on this, they cannot commingle client funds with their own funds to create another coin and then collateralize that to get a big loan from a bank they also created.
But they cannot, or they should not?
Well, great point.
Because I mean, where I'm trying to go is, how did FTX eventually did what he did? Were there any restrictions that he bypassed, or there are no restrictions whatsoever, and centralized exchanges can do whatever they want with our money?
So how it works? When you deposit money to the exchange, it's kept on the hot wallet of the exchange, and so technically it has access to your money. But
so does a bank.
So does the bank.
Correct.
Yeah.
But
so
there are some things that a bank can do, some things that a bank cannot do.
Yes.
And the exchanges, what's the...
Exchanges can do.
Okay.
Yes. So maybe you've heard of the Forex kitchens. The Forex kitchens, it's like the bad Forex brokers. And when you deposit money there, and people think they trade, but in reality, this kitchen, they just put any price they want, and at some point, you lose everything. At some point, you lose everything. So, of course, exchanges are not as bad as these Forex kitchens, but they also have access to the money, and we've seen a lot of examples in the past. It's like FTX is not the first exchange which collapsed. Mt. Gox was a long time ago, but then there were a lot of smaller exchanges in different parts of the world. There were some exchanges in Turkey, in Canada, in Japan, in Southeast Asia, and so it's quite a common thing. But people don't learn. People don't learn, and I don't know how to make it impossible for them to take the money. But definitely there should be some mechanism which blocks exchange from doing this.
Well, the idea of impossible, you're exactly right. You can create probabilities and improve the probabilities of the customer getting the bad end of things. You can greatly improve it through systems, but ultimately, you cannot legislate morality, which is a sad fact. I mean, they're human beings. Companies are human beings. Human beings are flawed. Human beings are susceptible to greed and all other vices. They're also capable of great things, as we know. So, to my mind, the foundation, the sort of post-FTX world will be built on is that of fiduciary responsibility. Fiduciary just means very simply that the actions taken in the case of a broker or a platform or an exchange are genuinely in the best interest of the client. So if that's the starting point, and the procedures and best practices and policies of a given exchange are in line with that, aligned with that basic theory and philosophy, that can vastly improve. But you will never bulletproof any bank, any exchange.
Correct.
It comes to the territory. In fact, our founder earlier today, Oliver, said, you know, we all love to put our head on the pillow at night thinking our assets are safe and our deposits are safe at this bank or that bank, but in our heart of hearts, we know that it's not absolutely safe. There is safer and there is less safe, but there is no such thing as absolutely safe.
Now, you both come from a trading background. I want to ask if there's any parallel between trading what we call penny stocks and alternative coins.
Most definitely, most definitely. I have borne witness to many pump and dump penny stock schemes, as many of you may have as well. And there are some definite basic themes or common themes, namely unregistered securities, savvy promoters, a coordinated effort to create a steady stream of positive press releases that keep people buying, keep people interested. The stock moves up, and the promoters and the market makers are selling into this strength as they get everyone else to buy. They're selling unbeknownst to everyone else, and by the time anyone is the wiser, the stock is worthless in a couple of, typically it's a 3-week cycle or something like that. And but having said that, there are still some very basic requirements and compliance restrictions that even those stocks fall under. So when I started to learn more about how FTX was melting down, I was just astounded at just the complete absence of any oversight or regulation or any kind of, any checkpoints, any fail-safes. So yes, there are a lot of parallels. The penny stock market has been cleaned up, I think, considerably. There will always be fraud in the market, but again, it's the idea of embracing not certainties, but probabilities that are favorable to the investor. I think that's the key thing, with the right amount of regulation, not excessive regulation.
Eugene?
So if the Wolf of Wall Street would make his company now, he would definitely trade like small cap alternative coins, because yeah, it's very similar. And so what I want to distinguish is to distinguish like all altcoins from the altcoins which are made only for pump and dump schemes. Because, for example, Ethereum is also an alternative coin, but no one would name it as just pump and dump coin, because it has real utility. There are smart contracts, and there are a lot of applications based on Ethereum, and all the DeFi originally was built on Ethereum, so it's a different thing. And at the same time, if you open CoinGecko or CoinMarketCap, there are thousands of coins and tokens listed there, and most of them are useless, and they are created just for one purpose, just to do this pump and dump schemes. And there are communities who do this. Let's say they find the coin which is very cheap, and they have the, I don't know, 70% of supply, and they can manipulate the market, and so they start to buy and sell it in one hand to show that, oh, it's growing. And then people who are not into the market and who don't know how it works, they just see, I'm losing out. I need to buy this coin right now. And so they are buying at the top, and then when they buy at the top, of course, the original market maker, he dumps the price, and the person loses money. And you see, there is, we should understand that this is the responsibility of both parties. The responsibility of people who started to pump these coins, and the responsibility of person who buys it, because he just wanted to get rich very fast without understanding the market, and the market punished him for it.
Well, there is, it's important to make the distinction between investing, legitimate, thoughtful trading, and then just outright gambling. And some people really just want to gamble, and I don't think you'll ever take that out of any market.
But what would we tell that, let's call it, uneducated investor? How can he be sure that the crypto that she's looking at is not this pump and dump thing, and there's a real project behind it? Is there anything that they can look for, any red flags to look for?
So there are a lot of criteria. For example, in Helion, when we look at the project, we do the strict due diligence, understand who is the team behind it, like what's the product are they making, does the market really need this product, or it's just some imaginary thing, like what is the size of the market, what is the tokenomics behind it. So would it be the situation that we invest and then the early investors that just dump the price and we lose everything? So, and it's just, you know, very briefly I describe it, but for every point I can speak for hours to explain how it works. And of course, for the individual investor individual unexperienced investor, this is very complicated to make this kind of analysis, but of course they need to make at least the basic due diligence. So I can give you an example. I think most of you heard about the Netflix show called The Squid Game.
Yeah.
Yeah, so a very popular show, and right at the popularity of it, there was the coin called the Squid Game, and a lot of people, they bought this coin because they thought that it's made by Netflix, and that it would be widely used. And what happened next? It was not affiliated with Netflix in any way. They just some random guy created this coin. And he did a very interesting thing. He just put in the smart contract that you can buy this coin, but you cannot sell it. And so you bought a lot of these squid tokens, which are totally useless because you cannot even sell them. And people did not check this basic thing. They did not check, is it affiliated
But where
with
should
Netflix?
they check it? I mean,
in a smart contract.
But not everybody knows how to read a smart contract.
Okay.
I mean, I don't know how to read a smart contract.
So you just can check the simple things. You, I don't know, write to Netflix or check in the news, is Netflix somehow affiliated with this project or not? And if it's not, it's already a big sign of a scam. Because it's just someone tries to impersonate Netflix. They say that we are connected with it, and that they don't have any connection. It's the same as with, like there is Dogecoin, yeah, Dogecoin. Yeah. And there are a lot of small meme coins which try to copy it, and they pretty much do the same thing, but you know, they are not supported by Elon Musk. They are not supported by the fan base from long time, and so like Dogecoin is useless, but it's funny, so people buy it. But this one, they're useless and not funny because they just copy, and there is not the community base behind it. And so, who will buy it? Who will use it? Like the first question which you should ask: who will buy my coins, and what for? This is the first question. And if you don't know the answer, it means that you just buy something which no one needs. And like you should definitely ask this question first before buying anything, not only crypto, but also stocks, or real estate, or wherever.
But many people want, they're just in such a hurry to gamble, and they want that rush. They want the excitement. They should probably just go to a casino, but the phone is right in their hand, and it's too seductive. And everybody knows someone that made 1,000x on some, we won't use the dirty word, but a not very good coin. And so that's the seduction, and it is intoxicating. Maybe there should be a rating system. Maybe these really lower level altcoins should be labeled extremely speculative. Maybe that would be helpful. I don't know. You know, buy at your own risk.
Every time you buy at your own risk. Yeah. You mentioned tokenomics. That's what I do, so that's some of the things I'm most interested in. How important it is for the tokenomics of a project, for the longevity of the project, and for the due diligence that you do at Helion?
Tokenomics is super important.
And sorry, and how do you, and what do you understand by tokenomics also? Okay,
what do I understand by tokenomics? Tokenomics is the token price, the valuation of the company, and the periods of unlocks, like lockups and unlocks.
Vesting.
And the token utility. Yeah, so these are the key things, and I can easily explain you why it's important. So for example, we invested in a project, and let's say 40% of the tokens will be unlocked at the listing. What it means? That 40% of total supply can be dumped into the market straight away. And this is a huge danger. So we cannot be sure that people dump this straight away, but we cannot be sure that they won't. And if we put ourselves to this kind of danger, we may lose a lot of money. And this is what happened a lot of times when just there are no vestings, there are no lockup periods, and people just dump and the price goes down so much that then no one buys it. Another danger is can be connected with the early investors. If someone entered the project long before us and he has much better price and he has a lot of tokens at the listing, he can sell it straight away to dump the price. Or even if he don't have it at the listing, but his price is much cheaper, it means even if the price goes slightly down, he will still earn money. For example, there was one of the projects where early investors got their tokens about 100 times cheaper than the later investors. And okay, let's say the project is listed and then the price may go down even 50% by one candle, but they still have 50x,
but
which is huge.
You're touching a very interesting point, but you guys coming from a fund, in this bear market, sometimes projects are being faced with tougher and tougher conditions from liquidity providers. And they are forced to make perhaps this sort of decisions, giving early investors very, very appealing the circumstances, let's call it that way, in order to get funding to get the project going. So it's also difficult from the project point of view, how to find a balance between all that. How do you guys approach that when analyzing a project?
Okay, so first of all, we should look at the project if it's thinking long term or short term. For short term, of course, they can do whatever they want. Like if we just need money and we cannot think about the tokenomics. But for long term, this approach is dangerous because, as I mentioned, it can dump the price. So when we look at the project, of course, we want the better price for us and the lower valuation. But at the same time, we are ready to go, to get some vesting period. We don't want to get all the tokens straight away, and we want it from early investors too. We want them to have their tokens locked, and so that maybe they get a small percentage of the tokens every month, and there is no need for them to sell everything, and there is no even technical opportunity to do this. What we discussed before with FTX and other exchanges, they can take your money. But if the tokens are locked up by the smart contract, even if I want it or you want it, we cannot do this. Yeah. And this is the protection. And this is the protection that should be for all the investors, and also for the future rounds, for the public rounds. So there shouldn't be an opportunity for people to dump everything in the market at the first candle, as it happened before. Because at the bull market, it could work. Like let's say if early investors get a much cheaper price, but late investors, or like the public, the crowd, they get worse price, but without the lockups, and they could dump their tokens, but they still were good returns, because there were a lot of other people who wanted to buy this coin, because it was so desirable that they are ready to buy much higher price. But at the bear market, the rules have changed, and if the price dropped a lot, token is not so desirable, and people just avoid it, and it can get into the death curve and just disappear.
And does it make a difference for you as investors in being the first investor or being perhaps the second, third, something like that?
I think it's on a case-by-case basis. We're very careful about what we get involved with in companies that we attach ourselves to. And we think this is a necessary, on behalf of our own portfolio and that of our clients, we have to protect their interests and our interests. But as Eugene said, this idea of completely unrestricted tranches that can be sold at will, we think this is a real danger. So in effect, we have a responsibility to protect investors from themselves, really. And so to release them in tranches, I think, is an important point. But we're really careful, and I think we were careful before the FTX incident, and so we've really sharpened our pencils.
Good. Let me touch on another topic before we start approaching the end. Crypto meeting business. We were discussing the rumor of Twitter either accepting crypto or launching its own crypto or accepting Dogecoin. You also mentioned the possibility that the second rumor of Amazon launching its own crypto. What do you think about that? What's happening in this near future where perhaps every company will have its own crypto?
Well, great question. In the case of Amazon, this could be a very, very positive thing, namely because any coin they would issue would be backstopped, certainly in theory, and I think verifiably, by this very large publicly traded company. To say nothing of the fact that Amazon has this vast universe of e-commerce and so forth, with incredible revenues and so forth. So this could represent a new faction of the marketplace, where the companies themselves, and certainly in the case of publicly traded companies that have already, that on an ongoing basis have adhered to very strict compliance requirements, cash reserves and all of that. So all of the doubt, or I should say not all of the doubt, I never speak in absolutes, but a lot of the doubt and uncertainty, a lot of the FUD is taken out of the equation, which I think is great. In the case of Twitter, Gene, would you care to?
So, of course, in case of Twitter, what we discuss is just rumors, but as we know that Elon is very very talented person, let's say, and he can definitely will try to earn on everything he touches. He's like the Midas king, and he is into crypto already. He understands the market. He did a lot of manipulations by the market, and if we had the regulations like the New York Stock Exchange, he could already get sued or imprisoned for market manipulation, but it doesn't happen. And so Twitter, it's a very good platform, for implementing the coins, because there is the huge audience. Yeah, almost 200 million use Twitter. Then there is the real use cases, how it can happen, and if he launches it, it would be the mass adoption. It would be the huge impact for the market, because we will see that one of the biggest companies in the world, very popular, almost everyone knows it, it implements crypto, and it will be the green light for others. Because before, when Facebook tried to add Libra, then the regulators didn't allow them. Yeah. But maybe if Twitter would succeed, it would be the green light. And also, I want to mention one thing is that even the companies which before they didn't respect crypto and said that it's useless or bad, for example, JP Morgan, in 2017 he said that, oh, Bitcoin, no one needs this, it's just a crap. But Bitcoin, like JP Morgan has their own trading department for crypto, and they add more and more services which somehow connects with this world. And I see it a lot in others as well. So, for example, I know a lot of venture capitalists who were very skeptical about it a couple of years ago, and now they heavily invest in the Web3 companies, even at the bear market, because they understood which value it can create. And
let's talk about valuation. Let's say, for example, Amazon, Twitter, whatever, they launch their own coin. Should that, let's say, 1 million coins at one USD, to make it easy, should that be summed to the company's valuation, or should that represent the company's valuation?
That's a very good question. I think we are in the process of determining that. And I don't mean to be evasive, because this is a brave new world. The traditional metrics somewhat apply, but I would say my best guess now would be that price discovery and maybe some hybrid valuation could be deployed. Having said that, a lot of the traditional metrics and just common sense kinds of valuation equations are very, very useful, but they have to be, we have to consider the uniqueness of this marketplace, this nascent marketplace. So it sounds like a roundabout answer, but I do believe a hybrid solution, again, that is transparent, and the same set of rules for everyone, so that you can do an apples-to-apples comparison. I think that's critical.
Eugene?
I think we don't know yet how it can be estimated, because of course we have the valuation of the company, and I don't think that the valuation of crypto would be the same, because the company has more real assets, and if it's crypto branch, you have the same valuation, it means it doubles its valuation.
Exactly.
I don't think it would be this way. There should be some solution, and probably it will, of course they will find it. And what is good in crypto is the airdrops, and this is what, if it happens, it would be the great gift for the industry. Because, for example, Uniswap, when they just, before they launching their coin, they did airdrops to all the users who used their the platform. Then the recent is Aptos, a new blockchain. They airdropped their tokens to people who applied for the testnet. And so if Twitter gives some airdrop of Twitter coins to all of its users or users who did certain actions, much more people will get into crypto automatically. Okay, they get these coins and then they will start to find out, okay, what can I do with it? How can I change it? How can I sell it? And this will lead to the mass adoption.
You will broaden the audience.
Of course,
yeah.
You will make it much broader than now. The same, which was like the crypto needs mass adoption. For example, this is Axie Infinity. Yeah, now it's not so popular, but when it was very popular, hundreds of thousands of people in Philippines and other Southeast Asian countries, they played it, and they get the crypto through the game. Maybe someone else.
But also some got into it simply to wait for the price of that token to go up and do nothing, just to speculate.
Yes, yes, yes.
And let's go with this one, perhaps one final question, and then we move on to the audience. Yeah. Let's say you have a portfolio simply of cryptocurrencies. Is it possible to diversify against Bitcoin and Ethereum in this crypto world? I mean, with all the other tokens? Or will every time any kind of portfolio that you will have will eventually be driven by the price of Bitcoin? Sorry.
Yeah, that's a very good question. That's a very good question. And,
Above my pay grade.
So for now,
I left it for the end. It's like I was easing you in,
very good question.
easing you into the tough
it's an important question.
But I did it when we only have 5 minutes left, so you can just babble for 5 minutes, and then I'll let the other guys ask.
So we discussed it before. Right now, Bitcoin is the main engine of the crypto market, and of course, all of the coins they follow it. But I assume that in the future, Bitcoin may not be the main cryptocurrency. And in this case, there will be some different movements. At the same time, even if it wouldn't be Bitcoin, it will be some other big coin. Of course, all of the coins are connected. And moreover, crypto is not only connected inside, but it's also connected a lot to the S&P. It has a strong influence from the political situation, and as it's the Federal Reserve is one of the main players at the market, because one of the main reasons why crypto started to plunge is just because there is less money on the market.
Interest rates.
Money is not printed, and then investors try to save their money. They get out of the risky assets, and now crypto is a risky asset. It can change in the future, but now it's a risky asset. So if they see it, they run away. And so for now, no matter what it will be, Bitcoin or any other currency at the first place, but they're strictly connected. And I don't think we could see that, let's say, all of the main coins are fallen, and then a lot of other coins are growing for a long time. It can be some coins can grow against the market. For example, I mentioned Trust Wallet, TWT, and it grow even the whole market fall down. In 2018, just before the huge crash, Bitcoin fell down, and Bitcoin dominance became lower, and altcoins grew. Mm-hmm. But it happened just for a couple of weeks, and then they started to fall down altogether. So for now, this it's not sustainable, and you cannot grow against the market for a long time if everything is bad.
Bitcoin, it must be said, it's really in a league of its own. Eugene and I are in agreement. It's really a commodity. It's electronic gold, if you will, and it's really found its way to a legitimate place where it's featured on Bloomberg and CNBC and the price of Bitcoin. So it's really uniquely positioned.
Guys, thank you so much. I've had so much fun having you here.
Thank you.
Now, let's give a round of applause first, and then we open the mic for you, for the audience, to make any kind of questions that you want.
I have a Do you think that that is kind of indicative of good self-regulation or a trustworthy actors in the space?
I think we're in really a moment of kind of white-hot terror in the general public around the world for our industry. I really believe this, and I think a lot of good will come of it, but I think a lot of bad actors needed to go away, and this washout will serve to accelerate that. The silver lining in this very dark cloud, in my view, is that the survivors and those who intend to thrive going forward, the exchanges and so forth, will have to be proactive in terms of self-regulation and their methodologies and their practices, because so much confidence has been eroded, kind of overnight. And so much depends on confidence and integrity. So I think that's the challenge of the industry going forward. But there will be, cream ultimately floats, right? And I think this will, it will take some time, but for this to be a vital, robust industry going forward, I think it has to happen. But I think that along the way to great heights and great achievement, and we are still believers, needless to say, setbacks and retracements are to be expected. So I hope that's helpful.
We have a very good saying, trust but check. So in terms of what you mentioned, I read a lot about this transaction, and I think it's very strange. So if you can avoid these two exchanges you mentioned, Gate and Crypto.com, it's better to do it, because there were a lot of rumors about the problems, especially at Crypto.com, because the huge amount of their reserves are in CRO, their own coin, and it dropped at that time, so it was in danger already. And if someone would like to attack it, it's definitely possible to destroy. It's definitely possible. So yeah, it's very risky. So for that, as I said, like, what is the best strategy from my point of view? You keep most of your money on the wallet. If you don't touch it at all, it would be a cold wallet. If you needed sometimes to use it, could be like part of the money on the cold wallet and part of the money on the hot wallet. And then you keep at the exchange only the money which you use for trading, which should be a smaller amount. And in this case, you are more protected. So even if something happens with the exchange, you will not lose everything. You will lose just part of your money.
Yeah, thank you. I mean, I agree. Like, Crypto.com have a lot of their stuff in their reserves in their coin. And same as SushiSwap, actually, it's like 85% or something. But yeah, my second question is, we also touched on JP Morgan actually trading crypto. So I know that Goldman Sachs's crypto desk is actually just tokenized bonds that they do for their private investors. And for like right now, people who are Web3 and crypto native are working in crypto and Web3 because there's no draw to working outside. So what do you think like JP Morgan would actually be doing and kind of like leading on? When do you think that these big banks and would actually properly be trading crypto like they are trading FX or stocks?
Well, it's sort of known in banking circles, if you will, that JP Morgan has had for several years now at least a very vital, very robust blockchain research team, task force. I'm certain that extends to the crypto world, certainly Bitcoin. And I think it is a fair jump to make that they are working in lockstep with Treasury Department, federal government, and central bank digital currencies, perhaps. So I think this is kind of the opaque part of things, but I think we should be prepared for what comes next from them. But regarding their involvement on a client basis, on behalf of clients, that part I'm not so privy to. The Goldman Sachs and the JP Morgans and so forth, other big banks.
I don't know the situation inside, but there are also a lot of rumors that they already traded actively for a couple of years. So if it's really so, I will not be surprised.
And sorry, final question about the hybrid valuation. So what type of valuation kind of from the traditional finance side do you see coming into the crypto sphere? Because from what I know, you can't really use DCF valuations on general utility tokens just because intrinsic value tends to zero over time. So what would you say would be used generally in that sense?
Very good question. I don't know that I have a solid answer. I would only say that I think maybe the hysterical part of the Bitcoin and or the crypto story is behind us, possibly, and I think there will be a lot more explaining to do and a lot more legitimacy required for new offerings as they come to market. And it's sort of a blanket statement, I'm aware, but I do believe that that's necessary. I think it's going to be very difficult to expect a great adoption or great trading volumes on meme coins and other, I won't use the dirty word, but those kinds of coins.
Thank you.
Sure.
So I think that a lot of valuations of the companies, they're just weird. If you look at the Shiba Inu valuation and some dead coins from the past, EOS, Repo, it's huge for this kind of projects, and also for the projects which come to us, to the fund, they're far from reality. No, not all of them, but some of them are really far from reality. For example, I remember one project which was making the game, and it was just an MVP, the alpha version, very bad made, and they wanted to attract money for the valuation of $100 million. And I asked them, like, guys, seriously, look at you, look at you. Why do you want to wear yourself so much? And they say, oh, we put so much effort and time and blah blah blah. And so this is just, just the fantasies. And the problem with a lot of projects is that they founders love their projects so much, like the child. You say your child is the best. Yeah, this is my child. This is the greatest child in the world, and they don't compare it with other child. They say, oh, this is my body. And but in the business world, it doesn't work this way. So you should be more realistic and look at the valuations of other companies and understand that if you try to attract money for super high valuation, first of all, no one would like to invest in you. And secondly, if someone invests in you at this valuation, at the next round, you won't be able to raise money. So you should be very strategically thinking when you decide about your valuation.
Audacity has to be accompanied by, a real sound argument and a real investment thesis that is highly credible and will somehow make sense.
I think we had another question there. Yeah.
Hi guys, I'm a pretty heavy DeFi user, and these days I pretty much only use centralized exchanges just to on-ramp fiat and then use decentralized services all the time. And I know you said in the talk that some of these, especially for traders, these platforms have some way to go, but there is a huge range of different DeFi products, and some of them are becoming very, very good. I was trading Fed minutes yesterday using decentralized derivatives platforms. And I wanted to know your guys' perspectives on what emerging trends in decentralized finance interest you, and also more generally, what do you see the future holding for decentralized finance? So definitely DeFi is one of the most prospective fields in the crypto world. And we have our own DeFi staking algorithm. So we stake stable coins with high yield because of the automatic rebalancing and some other features inside. So we are into it already, and not just playing, but we are into it. And I think it will grow. It will grow because at the Uniswap, the number of users, even at the bear market, there's still a lot of people who exchange tokens with one another. Then there are opportunities for like borrowing and making loans, which allows you to get additional yield. So this market will definitely develop, and it will also, it will somehow say, there will not be things as before, like what happened in DeFi in 2021. There was Ethereum, yeah, there was Ethereum, or this, let's say, Uniswap, Aave, Compound, and so on, and then other chains just started to copy it. And they did pretty much the same. They get higher yield and attracted the users who wanted to get higher yield. And then at some point it decreased a lot, and people stopped using this platform because they're all almost the same. But I think that it will not work anymore, at least until the next bull market starts. So there should be more innovation in the DeFi space. So for example, you mentioned the DeFi derivatives platforms, and it definitely will develop, like the OPIN, DYDX, and this kind of stuff. Then I know, like one of my friends, he was long into the options trading, and he's creating his own options platform, which allows you to sell Ethereum at the price you want. Then there are this tokamak and the other DeFi 2.0. So there are still plenty of opportunities how to use it, and definitely there should be more products in the field. And it's very important to educate users how to use these platforms, because when you first see the interface, it's quite complicated. And what Binance did a lot for the market, that they gave this simple education. You just open the exchange, and then you get the video, how to use it, where to click, and you have some tests which you should pass to show that you understand the risks. And I think that the DeFi platforms should provide something like this, because for the newcomers it's complicated, and the more complicated it is, the less people use it. And one more very important thing is the gas. Yeah, if you use Ethereum, and say you have a small deposit, and for $100 for one swap, maybe you pay $5, which is 5%. At some point it was much more. Like I remember I paid $60 for the swap. $60. So it means that only if you have the big deposit you can trade it. Otherwise, it's just stupid. You lose most of your money because of the commission. And so for this, like the layer 2 solutions like Optimism, Arbitrum, Polygon, they help a lot. And when they become more developed and people understand how to use it, it will be the big step for the whole DeFi ecosystem.
Okay, we can do one more, and then we need to stop to give way to the next masterclass. Anyone else who wants to do the last question? No candidates? Okay, then we can let you go home.
Thank you very much. Thank you, folks.
guys.
We hope this has been helpful.
A round of applause.
It's a pleasure.
Perfecto.
Okay, people, there is no break. Sorry for interrupting.
Yeah.
There is no break. I mean, we just switched the microphones and set up, and but please stay in the auditorium. Thank you.
Thank you. Don't forget your bag.
Oh, thank you.
Yeah, okay. So he will be giving the presentation.
We said hello before.
So he's going to give the presentation all alone. Okay. So we're going to take your mic and give it to him, and you can introduce him. You can, like, as you did yesterday. Okay. So, and we'll be moving around. So.
And you guys are doing some questions, something like that? Or is it just him?
Just him, and
If you want to ask some questions, I'll take the floor, no problem.
yeah, no problem. As you did yesterday.
Yeah, come. I think I'll go get a coffee.
I'll remove your laptop.
Yeah, I'll take it.
understand you, but there's some questions.
Yeah, okay, I'll play on my phone there. So anyway, you can do that. Yeah, please.
This is the spot.
Yeah,
I'll be available.
it's on the middle.
I'll be available.
Yeah. So if you're around, so I could give the podium mic, which is yeah.
Yep.
Okay. You want to test the mic?
Look, check. Yeah, I'm sorry.
I'll shift the light.
Yeah, but more or less I'll be on.
Okay, so we are ready for our second masterclass. Today we've got Navin Dsouza. Dsouza, all right, from Comtech Gold. They're developing this amazing product, which is a stable coin, not necessarily a stable coin, but a crypto that is backed up by physical gold. So now he's going to tell us all about it with this amazing presentation. So give a round of applause, and I'll give the floor to Navin.
Good afternoon, everybody. I know it's the later part of the day, so I don't think I'm going to make you wait for the entire 1.5 hours and complete much before that. So throughout the sessions, we have gone through various different assets, from NFT to art to various other Web3 and the other things kind of thing. So we are talking about something different, which talks about digitalizing or tokenizing the real world asset. So what we have done is we have done an asset-backed token, which is 100% backed by digital gold. So it's a gold token which is 100% backed by physical gold. So that's what our tagline is: experience the magic of gold. So just an introduction about us. We are Comtech FZCO. It's a free zone company which is registered out in the UAE. We started operations in May 2022. So we started the first token, or the first asset-backed token, which was on gold. And that's where we decided to think about what asset do we start with. So the first thought about was, why don't we do something on the precious metal side? And gold was the first choice by everybody. Why gold? Because gold has been known to everybody since historical days, and it is very easy for people to understand, and at some point or the other, everybody has some sentimental value attached to gold, which has been treated as an investment product right from ages. So we have built this entire system on the XDC network. We are the first company in the region to be Sharia compliant. We got a Sharia certification from Amani Advisors. Why did we do that? One is for the region. It supports Islamic investors. But along with that, what we are dealing here is gold. And the Sharia certification adds more emphasis about the actual asset backing. To be Sharia compliant, you not only have to be backed by physical gold 100%, but at the same time, that gold has to be identifiable, allocated, segregated. So you should be able to say that, okay, this is my gold. I can't just say that in a pile of gold, I have something in there. So we have our gold, which is in an allocated manner. We have recently tied up with the DMCC. DMCC is a government of Dubai entity. So we have tied up with their DMCC trade flow warranting system, wherein each and every gold is backed by a DMCC trade flow warrant, which is uniquely numbered, has a reference number. And a DMCC trade flow warrant is an actual legal tender document on the physical gold. We are listed on multiple blockchain exchanges. So we are listed on LBank, we are listed on Bit2 and Bitmart. Anybody who wants to buy the tokens can just open an account and buy it from there. The underlying gold is stored in an independent vault facility. So we use the services of TransGuard. TransGuard is well known in the region. It's part of the Emirates Group. It manages the whole valuable cargo out in Dubai. You can see TransGuard services everywhere. So they have 3 vault locations, one in the airport, one in JLT, and one in the gold market. So what we offer to the investors is the access to actual gold, but in a digital form. So you enjoy the benefit and security of physical gold, but at the same time you enjoy the fungibility and mobility of digital gold. These are about infographics about what we are, how are we connected, what are the wallets that we are supported, our smart contract address, what are the exchanges and the custodian side. Now, let me go through the basic product features about Comtech Gold. The first and most important product feature is about gold backing. It's 100% backed by physical gold. In the previous session, we were talking about the banks and the others run on a leverage function kind of thing, where if everybody decides to withdraw the money, there's not enough money out of it. But here, in our case, we are 100% back. So even if the entire investment population comes back and say we want to withdraw our tokens, we want our physical back, we can give it at any point in time. All the gold and the whole smart contract is audited and inspected on a regular basis. What brings the advantage of tokenization of gold is it brings in fungibility and liquidity. Since we are listed on the blockchain exchanges, we are available 24/7. We represent the gold price. It's a Sharia compliant product, which we got it from Amani Advisors. What it benefits to investors, it allows them fractional ownership. So currently, if you're a retail investor, the only option for you, if you want to take exposure on gold, is to go to the gold market and buy coins or bars and the others. What are the other platforms available? You can go to a CFD market, but in a CFD platform, what you do is you only hedge the price. There is no gold involved. Or you go to the futures or the spot market on an exchange, and the minimum quantity out there is 1 kg. Here what we allow is, we allow the benefit of actual physical asset, but at a fractional quantity. So you can go as low as 0.01 grams. Gold is stored and vaulted in a segregated manner. We are based on the XDC network. All the transactions that are executed on the network is done instantaneously. The average transaction speed is around 2 seconds. We have 0 custodian fees. So in case you do a physical gold or you go for an ETF, you have an annual custody fee which you have to pay to either your custodian or, in case of physical, to the vault provider or the safekeeper. In our case, there is no custody fees. The entire custody fees is borne by us. And as what I said already, we are backed by the DMCC trade flow warrant. Just as a comparison, because we receive questions from people that what is the benefit of digitalizing gold? If I have to buy gold, there are various investment products available. You have ETF on one side, you have physical bars, you have similar products which have come across the gold like PaxG, which is also available on the blockchain network. So we try to just do a summary, a brief about how are we different from the others. So the first and important thing when you do with a blockchain or with Comtech is you don't have to pay any custody fees. Your minimum purchase can go as low as 0.001 gram, but 0.001 gram is not feasible. And people ask us, why are you going that low? The reason we do that is in case of an SIP, you don't have to decide the quantity of gold that you want to buy. You can just say that every month I want to buy gold worth $1,000, and you will get gold worth $1,000. The settlement is instant as compared to 15 minutes to an hour on PaxG, and on the traditional market anywhere between T2 to T5, that is trading day plus 2 or trading day plus 5. We allow them to tokenize physical to tokens and tokens back to physical. At present, the entire redemption is allowed on a 1 kg bar. So if you have 1,000 tokens, you can request for burning your tokens and request for a physical gold bar. We are Sharia certified, as compared to the others, which is quite prominent and important in this region. And we don't have any AMC fees. So these are some of the hidden fees which when you go for an ETF or the others, you have to pay. Because we only look at the ETF fees, which is between 0.4 to 1%, but we don't realize that to buy an ETF, I need to go to a broker, I need to open an account with an exchange, maintain my balances with a depository where I have to pay a fee. In this case, we offer complete flexibility where you can buy it on any exchange and move it to your wallet. What are the key product features? The first product feature is the actual utility of gold itself. Currently, we are receiving requests from banks where they say that we want to link our credit card programs with gold tokens. Because currently you get credit card points as and when you spend, and you only realize it when you get an email from the bank saying that the points are going to expire. You have 1 month to do something about it, and that's where you go and purchase something. So we have got interest from the banks which says that why don't we pay in gold tokens itself. So it becomes an investment come spending option. It's an excellent gifting tool. So if you have to give to somebody, rather than getting into the physical gold and you're not able to split it, you just buy the tokens, just transfer it to their wallet, and it becomes an excellent gifting tool. It's an hedge against inflation. Gold predominantly over years has been outshining dollars, euros, other currencies in its value. Portfolio diversification and systematic investment plan. It supports individuals to go for SIPs in smaller quantities. So if I can say that I just want to invest $500, $1,000 every month, at the end of the year, I have some portion of it in gold. With regards to portfolio diversification, the prominence of our token has grown significantly. We would say with the other cryptos having a beating, because all of a sudden people realized that they cannot keep everything in cryptos. When everything was going up, people were happy. But when it started collapsing, they realized that they need to diversify the portfolio, and gold become one of the traditional asset. So what we decided, instead of people going to the traditional asset, why not bring it traditional asset to the blockchain network? It's a peg stable coin. If you talk about from a crypto and the blockchain space, the value of it is 100% pegged to the gram of gold. One token represents 1 gram of gold, and the price of the token is the price of gold. It's attractive and affordable because of the fractionalization and because of the ease to access. So you don't have to go to the gold market, you have to just sit on your tap, open an account, and buy it at the fingertips. These are some of the products that we are looking at. One is the monetization through collateralization. So currently, we have investors who have physical gold and they want to have some credit lines with the banks, or they want to have a loan against it. When they approach the bank says, sorry, I cannot accept your gold for multiple reasons. One is storage, one is quality issues, and the others. But the moment it's in a tokenized form, the bank knows that this gold is backed by 491 kg standardized bars. So what we do is we only tokenize it based on 1 kg internationally accepted bars. So we do London good delivery and Dubai good delivery bars only. It has to be 4 nines. It has to be backed by a bar certificate, which is a quality certificate issued by the refiner, to ensure that each and every bar is of the utmost quality. So this facility allows the bank to now take these tokens as pledge and give you credit or loans against it. So this is something which we are planning to start on in the coming year. Sharia compliant token, this is excellent for Islamic investors who want to look at Islamic products. Earning through leasing. So now if you buy gold, so currently when you have an investment in gold, so what you do is the only exposure on the gold price. How do you make money out of it? So we are launching a leasing program which will coming shortly in the next year, where you can enter into the leasing program and lend your underlying gold to bullion banks or bullion providers. So we will provide a list of internationally renowned bullion banks where you can deposit your underlying gold to pledging your tokens, and the bank starts giving you interest against it. So instead of being a dead investment where you have to pay for the storage, insurance, and the others, you start making returns out of it, just like a term deposit or fixed deposit with the bank. Just to give you an overview of the process that we follow. So the token creation can, if you are an investor, you can buy tokens in either two forms. One, you can go to any of the listed exchanges, buy the tokens. Second, if you have physical gold in the standardized 1 kg form, which meets our specifications, you can have it deposited into the vault and we can tokenize it. So the tokens go to the DMCC platform where the trade flow warrant is created, which is backed by the government. The gold goes stored into the physical storage and the tokens are created. Now the moment these tokens are created, you have multiple options of holding the tokens. One, if you bought it in the exchange, you can keep it in the exchange wallets, which in the current time doesn't appear to be safe. Or you can go for self-storage with cold wallets, or we also offer facilities and interfaces with custodians. So we have tie-ups with Copper, Propine, Fablocks. So you can open a custody account and have the token stored out there. Once you have these tokens, you have all the utilities which is available for them. Leasing, collateralization, transfer, you can sell it back, you can pledge, you can play around with it kind of thing. So it's basically having a token in your wallet, token in your pocket. So gold is something that you have it in your pocket. This makes it more fungible. This is some of the statistics that we have. We started around 5 months back. As of now, we have 122 kgs of physical gold tokenized in the form of 122,000 tokens. One token represents 1 gram. This 122 kgs of gold is stored with the vault operator with TransGuard in a segregated and allocated fashion with a complete bar number and bar list available. On a daily basis across the exchange, we trade around somewhere around 2 to 2.5 million worth dollars, which is around 48 to 50 kgs of gold. And as on date, the market cap is around close to $6.7 to $7 million. I have gone through this slide. How do we get gold? Two options. One is the primary market. You deposit your standard 1 kg bar with the vault. Inform to us. We verify the quality and the specifications of the gold. We create tokens to you, and you have the tokens into the wallets of your own. Second option, buy it on an exchange. Open an account with any of the exchange. Perform the KYC. Fund your account, buy the tokens, and have it in your wallets. These are our broad ecosystem partners. So we have DMCC, TransGuard, LBank, Bitmart, Byte2 are the exchanges where we are listed. XDC is a network. Decent, Yoda Plus, Fireblocks are the wallets and the custodians. These are just a list of few. Amani is one of the Sharia compliant advisors. And the others is where you have access to our product. What's been our journey so far? We started this conceptualization of this idea in 2021. That's where I decided to get into the product. We did a white paper. We set up a company in Q1 2022. In May Q2 itself, we decided to go live. That's where we listed ourselves on the exchanges. And our first milestone was 100 kgs of gold. Q3, we listed across LBank. We have also tokenized silver. So we have done it on a OTC basis where one of the investors who bought gold said that I also want to do silver. Can we do it? So we have tokenized almost 1.5 tons of silver. We got a Sharia certification. Q4, we did our listing on Bitmart. We did our DMCC trade flow partnership. We have started onto our own white label solution because what we realized is in case of an asset-backed token, there is a huge element on the physical asset aspect. So it's not only about the blockchain technology, but you need to be able to manage the physical element, which involves the vaulting, the other storage facilities, the controls in place to ensure that the ownership is maintained, the quality is taken care. So we have started our own white labeling collaboration solution where people can just piggyback on our tokens and launch their own tokens. These are some of the testimonials where the Sharia advisors, the other things which have come onto the partnership of DMCC and the others. And I think that's it from my side. Any questions? Yeah.
So how do you ensure that the physical gold is available with your partners after a few years, actually, when you're doing the white labeling for them and you're tokenizing them? Third question being silver. How do you tokenize the silver? Is it like linked to the CGU token itself, or how do you do that actually? Just curious. Thanks.
Okay. So I'll go by question. I think the first question is how do we make money? Because we spoke about all benefits to the investors and the customers and the others. So yes, this is important because we are not like the other ICOs where if the price of the token goes up, we make money out of it because we have a holding in it. The price of CGO token is the price of gold. Yeah, it's a straightforward. So we operate more as a ecosystem provider or an exchange. So if you see, where does an exchange make money? The exchange makes money on the transaction fee. So wherever we are listed, we get a share of the exchange transaction fee for us, because when we met the exchanges had various tokens, which is all about ICOs, about companies where the valuation is again a big debate. I would not say it's wrong or right, but it's a big debate. So they wanted to have some part of their tokens in a utility form. And what best than gold? So they wanted some portion where if any of their investors wanted to have some of their portfolio diverted to a stable asset, so they wanted gold into that. So that's where the collaboration came up with these exchanges, where we work as partners with the exchange. Every time a token trades, a part of their transaction fee comes to us. So this is where we make our money. So if you see from a asset perspective, we say that we bear the entire custody fees. We bear the entire insurance fees. So if you see, there's only 122 kgs which is there in the custody, but on a daily basis, around 20 to 25 kgs gets traded. So that's where the whole power of gold is. Gold is always considered as a currency. Why did people move on to your paper currency? Is because of two factors: fungibility and divisibility, where you cannot move it across. Blockchain brings into that power. So the gold actually doesn't need to move. So if you want to transfer value to somebody, you just transfer the ownership of the gold. You don't need to actually move the physical gold. Traditionally, you had to move the physical gold. That's where the whole issue about gold not being adapted as a currency. So we make our money on the transaction fee. That's where our money comes in from. Now with regards to the second question on the white labeling. So white labeling, what we offer is, we offer the whole infrastructure to our partners. So we don't give them only the technology. So in case, let's say you want to create your own gold product, you say, I have a market, people believe me, I want to create my gold product. There are two options for you. One, you get in the technology, to make the tokens, to deploy the tokens on the blockchain side. But there's a big element of the physical aspect. You need to go and open a vault account. You need to have your KYC done. You need to get the entire facility for vaulting. For your tokens, you might have to open a custody account to ensure the safekeeping of your tokens. That takes time. We have built it over the last 6-7 months. So what we tell people is, when you want to launch your gold token, you don't back it by physical, you back it by Comtech gold token. So one token of yours is backed by a Comtech gold token. And we have put in all the controls in place that Comtech gold token is 100% backed. So let's say you want to tomorrow launch 50 kgs of gold. So what we do is we buy physical gold 50 kgs, deploy it into the platform, create 50 kgs worth of Comtech token, keep it in an escrow account in a multi-signatory wallet, and against those 50 kgs, your tokens are minted. So indirectly, your tokens are always backed by Comtech gold tokens, which are backed by physical gold. So we will not leave the custody to our third party to maintain physical gold because I cannot ensure that.
So it will be in your control.
Yes, so the entire control is yours, but for you what happens is you just have a platform in place. We offer you, what do we offer in a white labeling platform? First, we offer you the entire tokenomic support, the smart contract deployment, the minting burning facility on a entirely multi-signatory wallet. We provide you a back-to-back feed so that you don't have to keep your reserves. As and when you sell it to your investors, you buy it back-to-back from us. Third, we offer you the entire liquidity of the Comtech gold tokens. So you don't have to build your own market. We give you the price feed and the entire liquidity. We give you the entire physical infrastructure. So your tokens are based on our tokens, which is backed by the physical gold, the DMCC trade flow, the Sharia compliance, the audit, and everything happens over there. Fourth, we give you the physical redemption option. So even if your investor says, I want to redeem gold, it can be redeemed against Comtech gold, which redeems against physical gold. So that's how we control the ecosystem. So if you want to launch it, you just connect our APIs and you can have your own gold product launched anytime. Then the next question is about silver. Silver is an independent product. It is not CGO. It has its own tokenomics, and each token again represents 1 gram of silver, and we have 1.450 tons into the vault in 1 kg standardized, 39 internationally accepted bars. So against that, we have created that many tokens.
What was the name of the token?
It is CSO.
CSO. That's also listed?
No, not yet listed. So that's what, we have done it on an OTC basis.
Okay.
So we have still not listed it because we are still seeing the market feasibility of silver, because as against gold, silver is huge on storage. Okay. So let's say a million worth of gold is around 20 kgs of gold, which comes in a smaller box. But a million worth of silver is 1.5 tons of silver. And 1 silver bar is 2 times the size of a gold bar. So that is the quantum of space that you need to store. So we are still working on the feasibility about how do we work it out, whether we absorb the charges or whether we pass on the custody charges on investors. So we've done it on an OTC basis, we have not listed it.
CGO, can it be done on any DEX? Because I see your network is something like I'm not sure what network that is on actually. I'm not really familiar with
XDC.
That. Why not on something like BSC or Polygon or those sort of networks?
So XDC for multiple reasons. One is if you go from an Ethereum perspective, so unlike your other cryptocurrencies, which moves 30, 40, 50% a day. Okay, gold in a good day will move 2%. So if you buy and start moving it on the network, the amount of Ethereum fees makes it non-feasible for you to.
Polygon or...
so we are adding on to the bridges. So from an XDC perspective, why not XDC? XDC's got over 1 million users. It is your transaction fees as close to 0. It is got your transaction speed at 2 seconds. It's got all your audit and the other perspective with it. Plus it also supports bridges to other Ethereum networks. So we can deploy it on any other contract as a wrap contract, which allows you to put it on any network. So that was the idea. And what people don't realize when you go into a physical gold as a retail, so we did our study when we were doing the tokens. So let's take for example UAE. Whenever you buy, go to the gold market and buy, every gram of price, there's at least a 5 dirham difference. So on an average, the price of gold is 200 in the international market. You have a 5 dirham difference. So international market will be 195, gold market would be 200. Just imagine you buying a 10 gram coin. So automatically you're paying 50 dirhams extra. Now the 10 gram coin will come to you in a coin form. They'll ask you making charges. So they give you option of whether you want their own minted coin or whether you want a branded coin. Own minted coin, they will charge you anywhere between 25 to 50 dirhams. So technically for an own minted coin, which is not of a particular brand, you're paid 100 dirhams extra, which is 5%. If you go for a branded coin, I was surprised, I checked it last week itself, they said the making charge, no making charge. I said, okay, so what is the charge? They say we have certification charge. And I asked, okay, what is a certification? It says it comes in a certificate case and everything. I said, what is the charge for that? It's 175 dirhams. So technically, you're paying around 10% extra just to buy a 10-gram coin. And when you want to sell it back, what happens? They ask you two choices. You want jewelry or you want cash. If you want jewelry, no charge. But they take charges while making the jewelry, 10%, 15%, 20%. But if you want cash, they say it's a 5% discount. So your in and out, when you buy a physical coin, is somewhere between 7 to 15%. And why do you buy a coin? It's just pure investment. It's not something that you can wear it across your neck or something about that. There's no value towards it other than the underlying value of gold. So in and out, you make 15% out of it.
Can I just ask you, what is the percentage fees that you make on each transaction to just to have an idea of this 5% charge for physical gold?
So from our perspective, as an end investor, so our tokenization fee is 0.2%. If you want redemption on physical, it is 0.5%. So that comes into the cost. And the transaction fee on any exchange is anywhere between 0.1 to 0.2%, and we get a share out of it. So on a higher scale, end to end, you end up paying 1% more, or 2% if you talk about the price difference on the bid-ask spread as well, but not anywhere more than 2%. So you're saving close to 3 to 5% on each side.
And trading on any DEX, I see only centralized.
Yeah, so we have our access on Mixin. We are working on other DEX platforms, but the concern on the DEX is the value of the coin, because it has to be 100% backed or linked to the physical market coin. So it becomes a little difficult. We are trying to work that equation out to manage the price. So it is not like a synthetic price about any token which is depending upon the demand and supply. Here you have a reference price. So if I put my token on DEX and if somebody puts it at 53 and the international market trading at 56, I end up losing $3. So that's what we are trying to build and work upon. So that's why we are currently on the centralized platform. We have various plans in the coming year. We are going to even come up with something like our own digital debit card where you can top up your gold balances and you can use it across the globe. So you can have gold in your card itself.
Thank you.
Thank you.
We have some coffee outside for you guys, and we'll meet you here tomorrow for the last day of the conference. Thanks. So you're launching the silver one, right?
Yes.
Good, good, good. Yeah, I know.
Thank you.